I'm looking at a 1040 tax form from 1960. It's amazing how much has changed between then and now, both in terms of how taxes operate and in terms of how we view the average taxpayer. So the first thing that really caught my eye is that they ask for, look at that, your wife's social security number. Nowadays they ask for a spouse. So the assumption was that the man was the working person in the household, and also they assumed everybody was straight, basically. I think both of those assumptions are pretty absurd nowadays. But this was 1960. In terms of tax changes, a lot of that happened in 1986 when Reagan reformed taxes. Unfortunately, it was reformed, but since 1986, the tax code has exploded again. But look at how long this is. This is 5 pages, and a few things that catch my eye are back then the deductions you can make. So look at that. You could deduct all of your interest, not just your mortgage interest. At the time, credit card interest or interest on any sort of personal loan was deductible, and you got to deduct all of your state and local taxes. I think nowadays you have to choose between state income taxes or state sales taxes. I think I wonder how they used to do this. Nowadays, if you want to deduct local sales taxes, I believe they estimate how much you would pay. I don't know what happens if you buy something large that is taxed. I have never done that before, but for the most part, usually the software that I use mostly just estimates how much Washington state taxes I have paid, and it just applies the deduction. Another thing I noticed is that back then when you entered your exemptions and you wrote down your children, so you list the first names of your children. Oh, they didn't ask for social security numbers. And what was really interesting was in 1986, after Reagan's reform, and they started requiring kids to have social security numbers in order to get the deductions, all of a sudden some 7 million children seem to have been abducted by a UFO. They disappeared from the tax system. So a lot of people were cheating on that. Oh, what else is different back then? So we got I think enter all your wages, salaries, that's reasonable. Excludable sick pay. I don't think I've seen that on a modern tax return. An excludable sick pay. And then you did the balance of that. Profit from business, that's normal. From farming, I think farming was a lot more common in the 60s. I believe nowadays there's a whole page for you to calculate farming income. And then tax on income on line 11. It probably tells you to fill out a different worksheet to figure that out. Taxes withheld, that's pretty normal. Okay. The county you have lived, that's pretty normal. Exemptions for person other than, see again, your wife and your children. I believe nowadays it's just for your dependents. I mean, there's no assumption for how the family structure should be. So in the 60s, we had much more traditional family structures. Did the dependent have income of 600 or more? So 600 in 1960 was actually quite a bit. Definitely a lot more than what your dependent can make today without running into tax liability. So in the 1960s, taxes were much more heavily tilted to the wealthy, it seems like. We got to look at the actual table to see. Look at this. If your deductions are not itemized, in line 1 above is 5,000 or more. 5,000 in 1960. I'll let you figure out how much that is. Enter the smaller of 10% of line 1 or $1,000. I'm not sure what that's calculating. That definitely doesn't correspond to any line we have nowadays. Multiply 600 by the total number of exemptions. So the personal exemption in 1960 was $600. To give you an idea, back then, a dollar used to be a $1 coin used to be made out of silver, and it had 3/4 of an ounce of silver. That coin today would be worth about $15. So 600 of those coins was your personal exemption. Actually, we recently got rid of the personal exemption. And then tax credits, that seems pretty reasonable. Total dividends, income from interest, that's pretty reasonable. Rents and royalties, other sources of income, explanation for deduction, depreciation, that's all pretty normal. Dividends, retirement. Although nowadays I think a lot of this is broken down into a new worksheet, because not everybody has every one of these. So in 1960, the structure of your typical household was very much different, it seemed like, and then retirement income. Anyways, a lot has changed in the last 50 or 60 years. Just not only the how we calculate our taxes, but just the general demographic of your average taxpayer.